And it's the construction players that are stealing the spotlight today here in South Africa. Another company out with results, WBHO. The group reported a 20% drop in annual headline earnings per share to 14 Rand 16 cents, while revenue fell 3% to 14.8 billion Rand. And joining us now to unpack these numbers is the company's chairman, Mike Wylie. Thanks so much, Mike, for joining us today.
Alishia.
Well, as I said, headline earnings per share down 20%, revenue down 3%. Take us through the year that was for the company, because it's the same theme that's been running across the industry. It's been a tough time.
It has been. I think we were expecting it, and we did predict it would be a tough year. For me, it's been quite satisfying, though, because the revenue is just marginally down, still close to 15 billion. And we made over a billion Rand operating profit. The operating profit was 14% down, still over a billion. So I think to be performing like that in a really tough market, I think our guys have done a fantastic job, and I'm really pleased with them.
Of course, we've seen that order book grow. 16.2 billion is where we're at right now. But, you know, again, and I'm going to pose the question that I posed to Roger a little earlier on, to what extent have your margins been sacrificed, or what margins are you enjoying at this stage of the game?
Yes, the margins are a problem, and I think our margin was 7.5%, or 7.4%, which is really good. It's going to be difficult to hang on to that margin. But on the other hand, there are a few other things falling in our favour, and the order book is looking very strong, which is good. But I think we're going to be in a low margin environment for quite a few years. I don't know when we'll ever get out of it. So as long as we really operate efficiently and effectively and run the business really well, I think we can still put in some good performances going forward, even in this low margin environment. Obviously, Africa it's higher risk, but the margins are better to go with that risk, and we believe our teams can manage that risk, so that's good for us. Our margins in Australia are very low, down to about 2.9%, and hopefully we can bring those up. So those are the sort of positives. But in South Africa itself, where our turnover now is less than 15%, less than 50% of our turnover, I think that's where the margins will be under pressure for quite a long time.
Of course, with that kind of pressure coming through, cost management within the various divisions become key and imperative. So what's the strategy that you are employing in terms of getting that cost line looking a little better?
I think we've got a very good management team. I think of our 95 divisional directors around the world, I think, or certainly in South Africa and in Africa, all of them have had their service with WBHO is over 20 years. So we've all worked together very, very closely for a long time, and I think that enables us to really fine-tune our overheads, fine-tune our effectiveness, build from within. Keep our costs down. I'm very pleased to see that in the newspapers on Sunday, not one WBHO person appeared on the top 150 salary list, and that's the sort of culture we have in WBHO.
Yeah, let's take a look at that skills base, though, and how you're actually retaining it, because I was chatting to a construction analyst at AfriFocus Securities earlier today, Hugo Chetty, and he was saying the most important question that came from the briefing was that you're noticing that the industry has only old skills. So just how much of a challenge does that pose for the industry, and what are you doing to combat this?
Look, I'm not sure if we were involved in those comments, but I think, when we had the World Cup, the whole world was saying we didn't have the skills to build the stadiums, the airports, etc. And we did them far better than they've ever been done anywhere in the world in terms of time and quality. So we are training all the time. It's an inherent culture in the business, and I think it's just amazing what we produce here with indigenous skills, building the buildings. Like if you go past Standard Bank and see the quality of that work in Rosebank, or the Alexander Forbes job outside Gautrain Station, the guys out there are producing fantastic results. So it's this in-house, on-site, ongoing training, which is almost a culture. So we'll be spending as much on training this year as we spent last year. It's about 15 million. And we think we're putting it in the right places.
Okay, let's take a look at other territories where CapEx is being dedicated, and you touched on it a little earlier, your Africa strategy moving forward. I mean, there's an interesting dynamic within the Roads and Earthworks division specifically, because instead of sacrificing margins on that end, you're actually chasing work on the continent. So run us through that strategy.
Yes, so we are, our teams, our Roads and Earthworks teams have always worked all over the place in South Africa, the SADC regions, whether it's in Namibia or the Far Eastern Eastern Cape or Mozambique. And for the last 5 years or even 6 years, we've been busy in countries like Ghana, Zambia, and more recently Sierra Leone. So we've developed very strong logistics capability, and which enables our guys to work efficiently and effectively in very remote and harsh parts of Africa. And we work with clients that we know will pay us.
Because that's
so
part of the big risk, and that's where a lot of the construction players got their fingers burnt venturing into African terrain.
Yes, so we carefully choose our clients, 90% of which is around mining infrastructure with major international mines. So we're confident we can still grow that business. We perform very well, by the way. You know, we certainly perform better, obviously, than the Chinese, but certainly other European competitors, and our guys are really good. So I think the way we've put this railway line in Sierra Leone through really harsh jungle conditions, it's just been fantastic, you know. So we're very confident about what we can do in Africa, and that will continue to grow and help margins.
Of course, you highlighted 50% of your order book outside of South Africa. What's the split then between your capital expenditure between local operations and international operations?
I would say it's definitely, it's most probably in a similar proportion to that. I would think about 50% of it now is into Africa. We're going to start increasing capital expenditure in Australia. We've always preferred to rent there, not become too capital intensive, but I think that's going to change, especially in Western Australia. And then just take it easy in South Africa.
Looking at Australia, I mean, have the floods in Australia created business opportunities at all for the company?
Yes, it came at a very opportune time. We've got a very nice roads business that we've had for about 8 years now in Brisbane. And one of the first repair contracts for the flood coming out of this flood levy that's was very quickly raised, about $3 billion. One of the first major contracts we were able to secure, just west of Toowoomba, and so we were very pleased about that. So Queensland looks quite good for us for a couple of years while they work through this road rehabilitation.
Oh, Mike, a pleasure chatting to you this afternoon. Thanks so much for your time. Of course, Mike Wylie, Chairman at WBHO, just running us through the company's results, which were, of course, released earlier this morning.